Hey, what's going on? Left, right, out. Important news that just happened this morning. If you're a subscriber to Liberty Watch or a follower of Ron Paul, which I am, and he's the one that really opened my eyes to a lot of the liberty movement. If you watch the video, he kind of had like an incident today, almost like a stroke-like deal, and he's been hospitalized. But according to Fox News, he's lucid and cognizant of everything. He seems pretty good, but we'll see what they say. I'm sure that news will be coming. But man, the guy's 85 years old and he looks amazing. He's always and been in really good shape, and just it's amazing how sharp that dude is, and still pushing the liberty movement. He's an awesome dude, and we would have been lucky if he went, if we'd have had him as a leader outside of Congress. But anyway, yeah. So, I mean, I hate to see. I'm looking at some stock market stuff right now, and it's. I mean, I just happen to there's not very much news on Ron, but we'll see. We'll see what comes of it. Anyway, let's talk about some things. I wanted to go. I mean, we could talk about markets. We already know what's going on. It's kind of there's a false sense of. Hang on, real quick. I got to do something there. Anyway, there's a false sense of optimism almost, and a lot of it's short term. So I look at long term plays. Like I said I think a couple videos ago, like if you're going to be trading, look at certain things and really understand them, and stop listening to the CNBC types. And then when it comes to like taking profits, this is what I wanted to talk about, because gold right now is under $1,900, which who cares? Like I don't, people, that's where we get hung up. People look at gold as like some kind of investment, and maybe it can be. Anything can be an investment, really. It depends on how you play it. And if you look at, well, people tell you if you'd just put money in S&P 500 over the long, well, nobody talks about it depends on when you buy in. There's always a sucker, unless you're getting a return on that money when it comes like cash flowing. You're playing the greatest suckers game pretty much, because it depends on when you buy and when you sell. I guess if you cost dollar, maybe it works out, but to me, if you're throwing money in there, you better understand where you're going, because you can make money off anything. But if you were like, let's take the oil industry, which is usually a pretty good industry to invest in, some pretty stable companies. I mean, if you'd have bought in at a certain time, just before this whole COVID thing, thinking you're doing something great. I mean, capital wise, if you look at it, you're underwater now. If it was cash flowing, a lot of those dividends were cut, but you might actually be at least making some money. But at the same time, your overall value, or what you could actually sell at right now, is significantly lower. So I guess the point being, and you could disagree with me, is like it depends on when you buy into any of this stuff. A lot of the things now, they don't even really have any real value. A lot of this stuff is overvalued, in my opinion. But back to the gold thing, to me, gold is not, it's a currency. Gold is money, so I don't look at it as an investment. When I am saving, when I'm cash, I'm not going to, or purchasing power, let's put it that way, that I'm not going to deploy any time soon, or I'm saving for something, I put it in gold. It's not an investment, it's a store of value. That's what I do. That is where I put it. If I'm trying to put money or whatever purchasing power into something, yeah, I hold dollars in the intermediate, and I trade in dollars, obviously. I mean, it's hard to do it in gold, but that's why I don't like to hold a whole lot of cash now, because you're actually losing a lot of money. They're just printing this stuff up. And granted, it's not as textbook, or it's not like a textbook where A plus B equals C. There's so many variables in this when it comes to inflation, and there's so much misunderstanding that's out there. It's kind of hard to see that. If you got to have a really good base understanding of Austrian economics to really understand what's going on. But anyway, so I don't even know where I was going. I always get in these damn rabbit holes all the time. But anyway, yes, I save in gold, and I invest with dollars into other things that hopefully cash flow. Now, playing the I call it the suckers game, or the greater of the idiots, playing for capital gains, the greater idiot theory or whatever. You're trying to sell it to, buy something low, sell something high. I do that, but I have it in certain assets. Like, what is a guarantee? What is going to happen in the market no matter what, right? That's what I look at. What's something that's always going to be there, and what's something that's part of that market? For me, I like volatility. It's there. There's always going to be something moving. So how do you play volatility? Well, you can play it through. Now, I hate doing individual sectors of companies. I'm not giving any advice, but I like to trade either, actual S&P 500 if you know some of these key levels or what's going on, or volatility itself in various forms. And then I also have gold stocks. I've done significantly well this year off them, and now they're starting to cash flow. A lot of these companies are starting to pay out dividends, which is great. That's what you want. Your goal is to create cash flow, and not just hit capital gains. If you can do it, but there's always the greater sucker, or whatever I was just saying, the greater moron. You better be able to understand your levels and buy low and sell at a greater price than that. And I'm at the point now where I do like an amalgamation of cost dollar averaging my positions, and then doing the same thing on the way. I do my same thing on the way. I do that on the way in and then on the way out. That way, I might not be capturing all the gains or buying at the bottom, which is almost insane. Who actually gets to do that unless you're some kind of insider? But I do get it I've been pretty good this year at buying and low and selling high based off those strategies, and in understanding what I'm trading. What else can we get in? I'm trying not to talk specifically about the market, but we're talking about just like principles. So like I said, I don't even look at silver anymore as like holding value, just to tie into silver. It is an actual money. The thing is actual money, but at the same time, I look at silver now as more of an investment because it is undervalued relatively. So I do that, and I'm willing to unload my silver if it gets to a certain price. But my gold, I'm keeping that. It's a long term. That's my store of value, and then I'll probably either if I do anything with that, I'll transfer it into like land or some kind of other asset that's going to cash flow me. What else is there? So that's what I'm looking at. If you want, it seems like we got a lot of retail investors in the markets now, and that's just, there's no commissions anymore. Pretty much any brokerage, you got places like Robinhood where you're just like a click of a button way off apps to buy and sell even fractions of a share. So you have a lot of people, they've gotten a lot of this money into the market now. There used to be a saying, when the retail investors significantly invested in the stocks, that's a time to get out. That's a time to be selling. And I subscribe to that. I think we're in a little bit different realm now. The technology is there, but it's not that I'm, like I said, I'm not. There's a famous Anthony Scaramucci. I guess not famous, but it was in his book when he was presenting to another hedge fund, or he's trying to sell something. He's like, markets go up, markets go down. It just is what it is. Now how do you play within that? So I don't even care if it's going up or going down. You got so much money out there, it should go up. Now what I do play, like I said, volatility. You're going to have these hopefully huge corrections and huge swings up, and that's how I'm going to play. That's how I'm going to make money. And then of course selling options off base positions, which has been really good. So I'm not subscribing. I'm not saying you do anything, but this is an instance of an option strategy that I in particular use. I have a base position of a gold company. Whatever you need, at least 100 shares, say. And I look at it. I have my cost average, which let's just hypothetically say it's $10, which in this particular stock is significantly lower. I think that one is trading at $10. I look at those options contracts. I'm going to sell calls against it. Usually within a month, because I want time decay on my side, and the greater the time, once you get out past a month, then time decay isn't as big of an issue for an options contract. And when you're selling it, you want time decay on your side. When you're buying an options contract, you don't want time decay. You want it on the flip side, you know what I mean? So I sell it within a month, and usually a couple strike prices above it, so that even if I get called out, it's become I get the premium, and then I capture whatever capital gains from a significant move that I feel comfortable with. Now, I've been close with this. I've held it all year. I've been so close to being called out, but I haven't. So I've been able to get that cash flow monthly. Granted, it's not that much, but I'm making a return, and then now it's paying a dividend. It's great. So then if I do happen to get called out, which it doesn't look like because you're looking at gold, it's under 1900, but that stock, they're still making money. Like it's working out. But if you can find stuff like that and play it right where you win and your risk is mitigated to a certain level, that's what you got to do. And like I said, you can always bet on or I guess any sector. Just learn it and be cognizant of the risks. And there is no safe play anymore. There used to be those safe blue chip. There is no such thing anymore. We got too much manipulation in this thing. It's not a real market. You have money printing gone wild. That is inflation. Now the volatility and the asset prices up and down and here and there, that is the symptoms. When they say there's low inflation, they're full of shit because it's a monetary phenomenon. Now the symptoms, just like the flu. When you had the flu and you have 100-degree temperature, your temperature goes up from your base homeostatic basis, your baseline, and it goes up. That's not the flu, right? That is a symptom of the flu. That symptom can be manifested in other ailments, but we know that. Then that's the same way to look at monetary policy. So inflation in particular. Inflation is the actual expansion of the monetary system. Now the symptom, a symptom, is asset price. Not all assets all the time. This ebbs and flows like water. Now in general, over time, yes, all assets will rise in that kind of situation. But there's also other things. So when they're printing this money, now you have to worry about the fractional reserve system, the banking system, because that's where the majority of the money is made. That's from lending at a fraction of actual reserve currency that they must hold on. So for instance, which I think it's like 5%, it might even be less, for every, like you put in $100 into a bank, right? Well, they can lend out under a 5% reserve. They can lend out 95, and then that 95 is put into another bank, and they can lend out whatever, 80, whatever something dollars, 80 point whatever it is, and 89 point whatever it is, and then so forth, in almost infinitum, to the point where there's a very small amount of cash. But that's how that money is created at pretty much thin air. And then of course when you pay debts, it's like the best way to look at it. I don't want to get into it because we're at almost 13 minutes here. If you look at Mike Maloney's monetary history, is a good educational deal to look into when it comes to that. But anyway, I'd like you to like and subscribe, and if you got anything, write some comments. I'll do some other videos. I mean, I know that some of these are like half-assed, but I'm trying to get into a myriad of topics and hopefully educate or get you, not even really, it's education, but I want you to think outside the box. There's like too much misinformation, even from, I call them the propaganda networks, the alphabet networks. You got the market pumper, CNBC and Bloomberg, and then whatever political party's in power, they're pumping up whatever they're doing. It's all, misinformation. And in order to get the actual facts, you kind of got to be able to read through it. And I always talk about that with the BLS numbers, the Bureau of Labor Statistics numbers, and how those are, the mainstream, even the Fed itself uses comparisons from numbers in the past to present, even though the way we measure some of this data is completely different, or I would say it different in a magnitude of sort that it would, a real scientist would not be able, he would at least disclose that these numbers are not exactly apples to apples. Anyway, like, subscribe, peace out.